Well, Carlyle Group, the world's second largest private equity firm, may buy a stake in a hedge fund manager as it looks to add more liquid investments. Bloomberg's Christina Alesci joins us now with more on this. And, it's interesting that they would make this move. Why now? What's going on here?
Well, David Rubenstein, who you pointed out is the founder of the firm, or one of the founders, actually, has always been very good at gauging what investors want right now. So he's been known in the industry as a really sharp marketing guy, kind of knowing what the market wants, knowing what institutions like pensions and endowments want to invest in, and then developing those products to do so, right? Mm-hmm. So there's been a lot of interest around hedge funds, and there's been a lot of interest around credit strategies in those hedge funds, as well as doing more liquid types of investments. So Rubenstein is just responding to that demand. But the question with Carlyle has always been, okay, you can raise the fund, you can raise the money, now can you pull off the strategy?
And they tried to before, right?
Yeah, they failed. That's right. They backed a manager in 2006, Blue Wave. Actually, I think it was 2007, and the manager had bought a large portion of mortgage-backed securities at the time. Mm-hmm. And as you know, that was the precise wrong time to buy. Exactly. Yes. So at that time, there was a huge margin call, about $400 million margin call, and Carlyle decided not to make it. So the fund actually collapsed.
Then what's different this time around for them? Did they learn anything from that, from their wounds, or not?
Well, I mean, that's yet to be determined. We'll see what Mitch Petrick, who is the former head of sales and trading, is going to, he's in talks with multiple shops. He was at Morgan Stanley, former head of sales and trading, and he's going to, hopefully, Carlyle's vision for this is, maybe with a guy who has this much experience, hopefully knows all the players in the industry, right, has relationships with them, maybe this time it'll be different.
Christina, this is a company that is not publicly traded, but there are some private equity players that are publicly traded, like KKR, which you follow, and Blackstone. It's almost starting to feel like you've got 3 or 4 mini Goldman Sachs from, say, 10 years ago out there that are starting to bubble up, and investors haven't really taken notice yet, but they might in 5 years from now.
Yeah, you're absolutely right. Actually, it's funny because a lot of the general partners who run these firms, they do evoke Goldman quite a bit. But who wouldn't want to be Goldman, right? So I think these guys do have their eyes perhaps set on becoming mini Goldmans, and their whole thing is we still, despite the fact that we're a public company, we still have a partnership structure, and everybody's included, and each one of them has a slightly different marketing, a slightly different marketing story, but at the end of the day, they want to remain small but diversified. And
seeing these opportunities, because the traditional banks that were buying hedge funds 4 years ago aren't really doing that anymore, right?
Yeah.
Right, but it's not just at Carlyle, right? You have KKR, who has been rumored to be part of the prop trading group bidding for the Goldman traders. You have Blackstone, who also tried to get into the strategy. I mean, and you've also had a lot of flameouts, right? KKR had that huge publicly traded mortgage fund, which was an absolute flameout. So it's interesting to see that so quickly people are getting back into this game. It wasn't too long ago that these were all huge issues for these companies, and just like that, these guys are ready to get back in the game.
Yeah, I mean, part of the push too for these firms is as you become a more diversified company, hopefully that'll help your stock price, right? Because analysts really don't know how to value, or it's not that they don't know, but it's kind of difficult to put a value on the fee streams that come from a private equity business, right? Right. So going into more diversified strategy actually helps them, put a little bit more of a fine point on valuations. Okay. So that's helpful.